Okay. Okay. Welcome everybody to our presentation tonight. We're really glad that you've joined us. My name is Ryan Harris. I am a home-based business expert. I've been in the industry of the home-based business world for the last about 10 years. I've learned a lot. I'm going to share with you some insights today. But I've also brought with me a special guest to help with the concept and the topic of tonight. The topic of our presentation tonight is the power and tax benefits of owning your own business in 2015. So let me introduce a dear friend of mine, my personal accountant, a good friend who keeps me in trouble and out of trouble. My good friend Scott. Scott and I, we've known each other for quite a while. Scott, I'm going to pull this up. Say hi to everybody.
All right. How are you doing tonight, everybody? Always a pleasure to be with Ryan. He's a ton of fun and an expert in his field, and just grateful to be on here tonight.
Awesome. So Scott and I, as we start this and as we start to talk about this tonight, guys, I just want to share with you some insight. So about 4 or 5 years ago, I was trying to find a really good tax accountant that I could use basically for the rest of my life. When I was growing up, my grandfather always told me, he said, one of the best things you can do if you're running and owning and operating your own business is find a tax accountant that can help you not only with your personal taxes, but also with financial planning, that has a great grasp of the marketplace and can really help you change the nature of your personal wealth long term. I remember many times I'd go in and see my grandfather at his place of work. He owned and operated a multi-million-dollar business, and he'd always have his tax accountant there. He'd go to lunch with him at least 2 or 3 times a week. They became very, very good friends, and like I said, he kept him out of a lot of trouble, and it was a huge benefit to not only his personal life but to his business. So I'm really excited to have Scott here with me because Scott has become a personal friend of mine. I haven't met very many people who are as knowledgeable about the markets as Scott is, who understands the benefits of tax laws, different types of entities that are set up, the tax ramifications of those entities. I mean, Scott could talk for hours and hours and hours and hours on all this stuff. And all I know is that he does my taxes every year. I send him all my information, and he keeps me out of trouble, tells me what I need to pay, when I need to pay it, and keeps the IRS off of my front porch. So I really, really appreciate Scott. Excited to hear some and learn from him tonight. Okay, so what I want to do first and foremost tonight here, so I want to jump on. We're going to open up this presentation. I think I figured this out right this time.
Looking good.
Yes, perfect. So our presentation tonight is the power and tax benefits of owning your own business. We're going to spend the next about 30 to 45 minutes with you. We'll leave the last 5 to 10 minutes for question and answer. I'm not quite sure how we're going to do that. Since we're live, we may not be able to do that, but we'll maybe field a few questions. If you want to text me, you can text me or send me a Facebook message. I can definitely pull that up and share some information with you. But let's just take a step back. Many of you that are on this webinar tonight are in the home-based business world, okay? Or maybe have thought about being in this world of home-based businesses. You've been approached by a friend and they talk about how great the business is, all the tax benefits that you can get from it, the lifestyle change you can have, the personal freedom you can have. And sometimes you roll your eyes and you think, oh boy, here we go again. I know what you're talking about. I know the feelings that you've had. I know the feeling that you had specifically with regard to that, because about 10 years ago I was in the same boat. I thought everything was a pyramid scheme. I thought they were illegal. I thought they didn't work. And I'll tell you what I've learned over the last 6 years specifically has changed my life forever. Now, in many conversations with networkers from all different companies, and in conversations I have consistently with this, I've learned 2 basic fundamental principles. There's 2 main reasons why people want to build a home-based business for themselves. They want time. They want time freedom, and they want residual income, ownership of their own time, and a sturdy, stable income that comes directly from the leverage that they've created in their life. Now, let me share with you my story. My background's in engineering, structural engineering. I'm a big skeptic. A friend of mine approached me about this, and he says, listen, Ryan, I don't know if you're open to the idea, but I'd love to sit down and share with you what I'm up to. And I said, sure, I'm open. I'm happy to take a look at what you're doing. And at the time, I was broke, and I was broken. I was broke from the fact that I was working as an engineer, living paycheck to paycheck. So maybe some of you on this presentation tonight can feel me, understand where I'm coming from that sick feeling of not being able to provide enough income for the needs of yourself, your spouse, your family, and it's a frustrating thing. And because of that being broke, you're left broken. You're left broken because you don't know what to do. You don't know where to go. You don't know how to try to accomplish some of those things that you're trying to accomplish in your life, some of your goals and some of your dreams. And what you found in that process is you forgot to dream, or you lost the ability to dream. You have no idea how many people I talk to on a day-to-day basis that are what I call robotic, or they're in robot mode. They forgot how to dream. They forgot how to think bigger because for so many years, they've been living barely within their means. So they don't think that they can do anything better. Well, I had a different paradigm. Even though I was broken, I'm a dreamer, okay? I wanted other things in my life. I wanted personal freedom. I wanted freedom to be able to do whatever I could in my life with my kids. My whole reason for building the business that I built is because I want the chance to be a dad. I want to spend my whole life experiencing every moment with them. Okay? Personal freedom. That was one of my reasons for building my business. And the second reason when I first started, obviously, is the additional income. You have no idea. I meet hundreds and thousands of people on a day-to-day basis, week-to-week, month-to-month, year-to-year basis that all are just looking to create a little bit more income to pay that car payment, or keep the lights on in their house, or pay their medical bills. So that's what this world of home-based businesses provides people. Now, I've met some really amazing people over the years in this world of home-based businesses. I introduced Scott to a friend of mine who's done very, very, very well with a specific company in the home-based business world. She's been part of the company. I think it was the first time she's ever done it. She's one of Scott's clients that I introduced to Scott, and she's been very blessed because of the risk that she took, which isn't much of a risk, but the sacrifices she made to create something more for her life. Now let's just talk about the Pareto principle just for a quick second. There's this concept of 80-20 rule, right? 20% or 80% of a business's income or gross sales or gross revenues produced by the top 20%. I wanted to find something on the flip side of that where really anybody could build in a home-based business world, but where the people that had put in the most time, effort, and energy really benefited from a leverage perspective. I wanted to be on that 20% side where, you know, anybody could build it from an 80% perspective, but only 20% really put the time, effort, and energy to create the success. I wanted to know if I spent that time, effort, and energy to create that success, that I would yield something from it, that I would gain a financial benefit from it, or what I call a residual income. So if I was going to do that, I kind of one day about 10 years ago, and really over a 4-year time period, I sat down and I wrote down some things specifically that I thought should be in a company in order for me to throw my name, time, reputation, and energy into. Now, I want to set this as a precursor and just help you guys understand that there's no simple road to success. There's no shortcuts to success. If you want to create long-term success in your life, there's a lot of time, effort, and energy you have to put into it. But there's ways to shortcut that. And what does that mean, or what do I mean by that? Well, there's specific indicators in business, in this world of home-based business, that you should pay really close attention to, because they will identify whether or not the company will be around for a while. I've seen at least 30 or 40 businesses in the last 6 years go out of business because they didn't have a few of these key indicators, or what I call success factors, in the context of their business. So what was I looking for, and what should you look for when you're evaluating your next home-based business opportunity? First, company track record. Does the company you're partnering with have a great track record? Is it a brand new company? You know, they say 99.9% of all businesses fail within the first 5 years. It's not just in the home-based business world, it's in any world. And have the, you know, what does that company track record look like? Do they have a AAA rating on the Better Business Bureau? That's a good indicator of whether or not they actually follow regulations and rules. Have they been around? You know, what does that look like? Do they have patterns of success? How did they capture, especially in this home-based business world, how did they gain their success on the front end? Was it organic, meaning they brought in new distributors, new people within the context of the business, or did they buy other downlines from other companies? Is the company financially sound? What's the backing look like for the company? Are they debt-free, or are they leveraged to the hilt? Who is their funding source? Okay. Unique consumable products. Is your product, you know, we'll get into this a little bit more, but do you have a product that people actually will buy? Is your product competitively priced? Does it have a high reorder rate? Is there low personal production required? Is there a low entry fee to start your business? Now, I know for some people, $2,000 is a low entry fee when it talks about starting your own business. But what is that for you? What's that low entry fee look like for you? Is there low attrition, meaning do your customers or your business partners stay in your business? What does the timing look like? Does your product meet the timing of the marketplace? Is there some breakage in the compensation structure? I'll explain that here a little bit more. And is there any risk? So these are the 12 key indicators that I look for when I'm analyzing a business. And interesting enough to note, if you'll go through and look at these individually and see what your company has, my question would simply be this. And I'll ask it here again at the end, but which one of these would you like to eliminate and still throw your time, effort, and energy into? So let's talk company track record. How long has the company been around? Like I said, most businesses, what's interesting about the home-based business world, guys, is everybody's talking about, well, it's a ground floor opportunity. I get that there's great opportunity when it comes to ground floor. I understand that 100%. However, the level of risk is a lot higher as well. So you have to measure your risk tolerance. If the company is just getting started and has never really been around, maybe one thing you can look at is their management team. Where did they come from? What type of track record do they have? Is the management team strong? Do they come from a network or a home-based business world? Or do they come from a corporate world? What you'll find, and I've seen this many times, most companies that fail in this world of home-based businesses, their CEO or their founder came from the network marketing or the home-based business world previously, and they don't understand all the key fundamental principles to running a solid business, so it creates some problems long term. What's the history of the company look like? Do they have a track record? I don't know about you, but a lot of people are very hesitant to jump into new companies because they've been burned before. But other people have created huge amounts of success. So it all depends on what your risk tolerance is and who you know and the people that you trust that are introducing you to your home-based business and what that looks like. Next one is financially sound. Is the company leveraged? Do they have a credit line that's so crazy that are they going to outgrow their capacity to facilitate the manufacturing processes or distribute the products that they'd like to distribute? Do they have a really good financial backing? What does that look like? How much is allocated for that financial backing? What's their risk tolerance? Is this a company that's going to go IPO? Lots of questions. What does the track record look for changes? How long has the company been in place? What does the compensation plan look like currently, and what margins are allowed? Okay? A lot of in-depth, detailed questions. The next one would be unique consumable products, meaning are the products that you're using, are those types of products that you'll go through and use over and over again? Most products in the marketplace, in the home-based business world, are that way. I guess the next question I would ask is, price-wise, are they priced so much, however, these consumable products priced so much that they're too expensive for you to spend money on, so you don't consume them as frequently? Is there a replacement product that can be found that's a lot less expensive than what you currently have? Okay? Is your product priced based on the fair market value, or is it priced on the competition in this home-based business world? Now, some of you may not understand that, but let me explain. There's companies out there all day, every day that feel like the only people they have to compete with, especially in this home-based business world, is the next home-based business world. If you were to take that product and place it on a grocery store shelf, would the product sell? Does the price warrant the value that you're putting towards that specific product? The next question that you'd ask yourself is, what does the reorder rate look like? Are these products that everyone needs and uses every single day? Because if they are, guys, that's where your residual income comes in. Funny enough, that terminology, residual income, in my opinion, is so grossly overused in this home-based business world that most people don't even know what it really means. The definition of residual income is income that comes in monthly based on products or services that are purchased within the context of your downline, your organization, your customer tree, whatever you refer to that as. It's not based on the new signups in your organization and the starter packs. That's not part of your residual income. Those are commissionable dollars. Because if that stopped and went away, what percentage of your paycheck would go away? You have to be very, very careful with that concept, guys, because the reality is this: most businesses in this home-based business world are very front-loaded heavy, and 75+% of the dollars that people earn on a month-to-month basis are based on front-loading bonuses and programs like that, and not based on the residual income. Like I said, the main two reasons people build a business, a home-based business, is for residual income and freedom. Well, if your residual income is based on other people signing up consistently and those people stop, you might get a huge pay decrease from your activities or from your organization. The next thing is low personal monthly production. What does that look like? Do you have to purchase astronomical products at an astronomical price so that you feel sick about paying for that every single time? Are you replacing your products? Is the dollars you're spending on your product used, or could those dollars be used in a different place? Because ultimately, when you talk about your customers, that's the analysis that they're going through in their mind, right? They're trying to figure out, does this product still warrant the dollar that I'm spending? So value proposition. Not only that, but low personal production. If you are building a business in this home-based business world, do you have to spend a lot of money to make money? You know, I know there's some home-based businesses that require you to spend $2,000 to $3,000, continue to spend $1,000 or $2,000 a month to buy inventory to try to resell it. Going into debt to build a business in this home-based business world used to be the only way to do it, but guys, it's changed. The dynamic has changed, and there's businesses out there that you can start for very low startup cost and create tremendous amounts of income. Okay? The next one is a low entry fee. What is that investment look like? What does it look like for me? How much do I actually have to take out of my pocket, and how quick is my return on investment going to be returned to me? You talk about low attrition. Do my customers continue to purchase consistently? Do they, even if they don't purchase every single month, is there enough value in the product that they will continue to shop with you or with your company? Okay, so I've given you a few things to think about here, guys, and a couple more here. Timing. Is the business positioned appropriately? Let me explain. Are you selling DVDs right now? Or are you selling cassette tapes, or VHS tapes to where you can't find a VHS player anymore? So is your business positioned appropriately? And everybody's business should be. But what about the marketplace? Is the product that you have meeting the market demand, or is it a trend? Because if it's a trend, trends come and go. But products that are fair, in the fair market value that people are using on a day-to-day basis, those don't tend to be trends. Okay? No breakaways. Is there a problem with the compensation plan that can affect your business tremendously? Breakaways meaning if I bring somebody in better in my organization and they surpass me in my rank advancement, do I lose them and the residual income that came from them? Or do I get to keep that person and continue to collect the residuals based on the work that I put into it? And then the last one here, guys, is there any sort of risk involved? Now, as we transition in, I want you to go back and think of all of these things. And hopefully you've taken some notes. We're going to record this and throw it up on YouTube. But hopefully you've taken some notes and maybe analyzed a little bit of, what does my company have? Am I in the right business? Is it meeting the criteria that I want? How many of these things specifically are criteria that I want in my business? Because remember, the main two reasons for building a successful home-based business or working to build a home-based business is the residual income that comes from that and the time freedom it allows you to do and be whatever you want to be in your life. Zig Ziglar said it best, and the thing that I love the most about home-based businesses in general is simply this. You cannot create huge amounts of success, even with all of these things in place. You can't create huge amounts of success in your business unless you surround yourself with really, really good people. You can have everything you want in life, everything, by just helping enough people get what they want. And sometimes it's on your dream board of what you want to accomplish. You might be a dreamer like me. I have lots of hopes, lots of aspirations, lots of things that I want to accomplish in my life. And there's obviously business principles that I need in my life in order to create that. And like I mentioned before, one of those key things to keep me grounded, to keep me savvy with what's happening in my business, maybe even in the marketplace, is a good friend of mine, Mr. Scott Smith. So, Scotty, I'm going to turn the rest of this presentation over to you, my friend. Maybe give us some ideas as far as the tax benefits that come with your business or with owning and operating one of these crazy businesses.
Yeah, definitely. And just to plug for Ryan, he spent a lot of time praising me, and so I feel like I need to return the favor. Ryan is one of those relationship people that, if you meet him once, he's your friend forever. And somehow he's managed to not only take that physical meeting and do it online. And so I know he's made a lot of friends out there that perhaps he's never met in person. And that's just a testament to his ability to use his personality and that force and bring it to the online world. And so can't say enough about his ability to do that. As far as what I'm going to go over today, Ryan asked me to talk about some things that are pretty common for self-employed business owners and taxes. And I know everybody wants to tune in and listen to taxes at dinner time. But really, Big Brother out there, he's got he's in the details of our lives. He's in every transaction, it seems like. And so you can either try to hide, kind of like the paranoid Rob Lowe on those commercials that you've all seen, or you can try to embrace the law and make it work for you. And so this is one of those things where you can make it work for you. So the benefits of being self-employed, and specifically having a home-based business, are many. And the primary benefits are that you're able to really define what your own income is when you're self-employed. When you work for somebody else, your W-2 is your W-2, and you can't really fight that. When you're self-employed, you have all kinds of ability to change your income as opportunities arise in the tax world. The other big one is using some of those expenses that you incur personally every day, and and convert those to business expenses, things that either are completely off the table if you're employed by someone else, or things that you get a minuscule amount if you're employed by someone else, or really you can take a huge advantage if you're self-employed. So we're going to go over those, and then right at the end we're going to talk about some of the downsides and immediately give you a solution to those. And so let's move on just to the first topic, your home office. Okay. And so.
Sorry, Scotty, keep going.
It's all good. So home office is where we're headed. And so it's a couple slides up.
Oh, there we go.
Now the home office. All right. So one more. Sorry about that.
There we go.
So home office. People ask me all the time, say, I have a computer in my living room. Is that considered a home office? No. Okay. You have to have some space that's exclusively and regularly used for your business. And that can be in your house, it can be in your apartment. You don't have to own the office to make it your office. Okay. There's even been people that have claimed a houseboat as their home office. Okay. And it's passed. You just have to use it exclusively and regularly for your business. So this is one of those things where you can take those personal expenses that you have, seemingly personal expenses, and use them as a business expense. For example, if you have a room in your apartment, a room in your house that's your office, use it to store product, use it for your computer where you track all your contacts, do all your accounting, that's your spot. Say that spot is 15% of your home. Well, you get to claim 15% of all the indirect expenses associated with that. So that's mortgage interest, that's real estate taxes, that's rent if you're renting the place, it's insurance, it's utilities. And if you have anything that's directly associated with just that office, say you had to go out and get super high-speed internet for your product, is the only thing that your customers would allow, and you got that exclusively for that office. You can do 100% of that. The other things you can claim 15% because that's a portion of your home that you use for that office. So that's one example that's something that's it's either limited or completely off the table for people that are employees of others. Okay. The next one, the home office. This is kind of a decision tree to help you know if your home office is deductible. Okay. And so this is mostly for later if you want to jump on YouTube and pause this and print it out. This is the classic IRS. There's arrows going everywhere, but you just answer yes or no, and you can figure out if you can deduct your home office. Okay. So let's move on to the next one. So healthcare. This one is huge now. Okay. 2014 is the first year that everyone had to have health insurance. The IRS went live with filing 9 days ago on the 20th. We've done about 350 returns in our firm so far, and every single client has questions. How does the Affordable Care Act help or hurt me? Okay. Everybody has to have insurance. There are some exemptions to that, mostly for lower income people. But the big carrot with this is the ability to get credits to help you pay for insurance. These credits are for those that make between 100% and 400% of the federal poverty level. And to give you an idea of what that means, and for 2015 it means for a family of 4 earning between 23 grand and about 95 grand a year. So that's a pretty big swipe of the population. Okay, those people are eligible for credits that help them pay for health insurance. And those credits have become the new monster of credits for the IRS. In the past, it was earned income credits, child tax credits, things for kids. These insurance credits are the big money now. And as someone that's self-employed, you have the ability to adjust your income, unlike someone that has a W-2, and the ability to adjust your income to receive larger credits. Okay, that's a huge advantage. In addition to that, if you are the only employee of your company, why not give yourself a Cadillac health plan? You can get a health reimbursement account to help you with dental and vision expenses, a health savings account where you put some money aside and it rolls over from year to year. You don't have to spend it every year. a flex plan. Most people are familiar with flex plans, where it's kind of the use it or lose it principle. Some of that's changed in recent years, but there's still a good plan. Um, if you're self-employed and you don't have employees, give yourself an awesome plan. If you do have employees, you can't discriminate against the rank and file, but you can really attract some awesome employees to help you if you're giving them an awesome plan like this. So this is huge now, and I think we're just touching we're just seeing the tip of the iceberg on the planning for this. The next one on the list is vehicle expenses. Okay, if you're in a home-based office and you're going to clients all the time, you're in the car a lot. Okay, I think some people would argue that their home office is their car, just because of all the papers and everything that they have there. With cars, you have two options. You can either deduct actual expenses versus standard mileage rates. Okay, so actual expenses, you're tracking the original purchase of the car. You're tracking every time you fill up with gas. You're tracking every time you get the oil changed. If it breaks down, you're tracking the repairs. And really, that can be a huge thing, especially if you're buying new cars every year. It's usually a pretty good idea to do actual expenses. However, if you're like most and you get a good car and you say, I'm going to put a ton of miles on this car, perhaps the standard mileage rate's a better option for you instead of doing actual expenses. The reason for that, it's a little bit easier to have a mileage log than it is to hang on to every receipt that you've ever had for your car. And notoriously they always get lost because they're in the car. A mileage log is a little easier. This year, 2015, you get 57.5 cents a mile. So say you buy a $30,000 car, but you plan to put 100,000 miles on it. So $30,000 car, and you add the gas up and everything else. That's kind of it's kind of a cloudy picture of what that car is really going to mean to you tax-wise. With the mileage rate, if you're going to put 100,000 miles on that car for business, you already know it's going to be a tax benefit of 57,500 grand, or 57,500. So tracking is a little bit less of a burden with the standard mileage rates. There's all kinds of apps out there now that use your GPS to see how far you've really gone. You just press a button when you start to go, press a button when you stop, and log in the business purpose. Okay. The next thing on the list is travel. Okay, so home-based businesses, especially multi-level marketing and things like that, always have seminars. Everybody likes to get together because you don't really have a common office, and so it's always good to get together with your buddies and your coworkers and see how they're doing and learn how to perform better in the future. So when you're deducting travel, a traveler's only away from home if a round trip requires sleep. Okay, and that's kind of a gray area. So for example, if a reasonable person would drive 4 or 5 hours and have a business meeting, sleep the night, and come back, that would be considered travel, right? But that same person may decide to travel, drive 4 or 5 hours, have a meeting, and travel back the same day. That still qualifies as travel because in most people's view that would require some sleep. Okay. You also have to be away from your tax home. Your tax home is where you work. For example, I know a CEO that lives in Park City. Wife loves Park City, won't move away from Park City, but his job is actually in Rexburg, Idaho. So every week he commutes up to Rexburg, Idaho, while his family stays in Park City. His tax home is Rexburg, Idaho, and so his travel is personal, going to and from Park City. So that's a benefit that he's giving up, choosing to live there. Another thing that you can do is you can take, with travel, you can take your actual expenses. So that's travel to and from, that's travel while you're there in the location. Or you can take a federal per diem rate. It's kind of the same concept as the mileage for the vehicles. Per diem rate's a little lower usually than actual expenses, but it's easier to say, I spent this many nights, rather than having to keep a hold of every receipt. Retreats and vacations, I get asked all the time, Scott, I'm going to Mexico. Is there any way I can write it off? Okay. I'm going to Hawaii, but I'm going with my business partner. How can we write it off? Well, the primary purpose of the trip, as evidenced by the time there, has to be for a business purpose. Okay. And so while you're there, you have to spend the majority of the time doing some kind of business. And if you have some personal time, then that's okay. Even if you were home, you'd work 9 to 5 and then have some playtime. But this is one of the things where the devil's in the details is something probably that we need to discuss, and the decision trees on these are ridiculous, so I'm not including them. You can just give me a call.
I was going to say, Scotty, this is why I like having you, my friend, because I mean, guys, listen, on this type of a presentation, you can see all the different things that you should be taking care of. And it's always great to have a great tax accountant that can just ask you the right questions and log it for you, and you're good to go. I mean, don't get me wrong, there's a lot of things that you need to do as far as taking care of your own finances, but it's always great to have a guy like Scotty who can help you out with the rest of that. So.
Yeah, thank you. All right, meals and entertainment. Okay, this one's been constantly abused in the past, and so on this, you only get 50% of what you spend. Only 50% of it's deductible. Again, you want lots of documentation on this. What's the business purpose? But the IRS still recognizes that lots of business is still closed at restaurants and golf courses and in a fishing boat. It's just how business gets done. Business is about relationships. And so, with that caveat, they say, well, we recognize you need that, but we're only going to give you 50% of it. But still, that's something that, if you're working for somebody else, perhaps you have some kind of expense account, but they're certainly not going to give you full reign on whatever you think is reasonable and necessary to get that client. Okay. Moving down a little bit, next thing is child labor. Okay, we're not talking about sweatshops overseas. We're talking about sweatshops here with your own kids. Okay. You can employ your children. Okay. If you employ your children, they're not subject to federal unemployment taxes. Okay. So if you're doing well enough where junior can help you out, wonderful. Give them a wage. They're not subject, if it's not a corporation, then they're not subject to Social Security and Medicare. They're not subject to federal unemployment tax. And so that takes everything off the table except for just withholding. Now, if they make under $6,300 in 2015, you really don't have any withholding requirement either. So you can pay your kids $6,300, deduct it as a real expense. They actually have to do some work for you, but you can deduct it as a real expense on your tax return, on your business tax return, and not pay any of the associated payroll taxes with it. Okay. The last one, and this is the huge one. Okay, this is the big one. When people ask me, what kind of loopholes do the rich enjoy? What kind of tax loopholes do the rich really take advantage of? And they're always looking for some secret, subsection of the tax code that nobody knows about. Really, what the rich do more than anything is they put a ton of money into their retirement accounts, and that takes lots of money off of their current tax returns. And so there's all kinds of options out there. It's really just a question of how much you want to set aside. Everybody's heard of IRAs. Everybody's heard of 401ks. There's a bunch of others. There's if you get big enough, you could pay yourself a little pension. Some of those pensions that bankrupted auto manufacturers. The things that guarantee a defined benefit when you retire. That's something that you could end up paying yourself. Kick that can down the road. Don't recognize tax on it now, and just have a comfy retirement. This is the biggest, the single biggest thing that you can do if you're self-employed, is set yourself up a nice little nest egg and avoid some taxes in the process. And the next couple slides, they show just how many options there are. Okay, and again, this is more for pausing, looking at the video afterward and pausing and maybe taking some notes and seeing what would apply to you. But there's traditional IRAs and Roth IRAs. There's non-deductible IRAs. There's something they call a simple IRA. It's not more simple than a traditional IRA. It's as simple as actually an acronym. But each one of these, you can put more and more money aside. And on the next slide, there's even more. There's even more accounts. SEP accounts, solo 401k, 401k, Roth 401k. You can put 53 grand into these. On the right, you can put 53 grand into these and take that off your tax return this year. And if you're over age 49, if you're 50 and up, you can put almost 60 grand away and not pay tax on it until later. And so that's a huge benefit. And in the Roth components, if you're a little younger and you still have a ways before retirement, maybe one of these Roth options is good for you. You can deduct the 53 grand that you put in, and it's not a current tax benefit, but down the road that's all tax free. Growing for 30 years tax free, and then when you pull it out it's tax free. That's a huge amount of money, and being able to determine how much and when, and being in charge of your own plan, that's a huge benefit of being self-employed. Okay, so those are the big benefits. Now we're going to go to the downside of being self-employed for taxes. The downside is that you have to keep track of everything. Okay, so all of a sudden you're wearing all the hats. All of a sudden you're the accountant, you're the CFO, you're the CEO, you're the HR specialist, you're everybody. Okay, and you have to keep track of everything. And I was talking to a client today, and he said, "I have all these receipts, but I've learned that not all cash registers are created equal, because some of those receipts fade over time. So I have a bunch of blank pieces of paper that don't prove anything." And that's a bear to try and keep up with all the paperwork. So, and then the other downside is self-employment tax. The first year that everybody decides to go out on their own, they love receiving that gross check. It's not a net check, it's a gross check. There's no taxes taken out of it. That's a beautiful thing. What they forget is all those taxes are coming at the end of the year when they do their tax return. And that can be a gut punch to some people. So let's talk about some solutions to this. Okay? So keeping track. We live in a wonderful age now where we have these awesome little smartphones, and there's an app for everything. Okay? There's an app for everything that you can imagine for keeping track of things. And they all sync with your bank accounts, and they all sync with GPS, and all you have to do is take the time to note the date, the client, and the purpose. Okay? It's a beautiful thing, and you just use those magical opposable thumbs. Okay? And then bookkeeping. Bookkeeping is getting super cheap. For example, in our office, we have clients in about 45 states, and a lot of it is because they don't want to do their own bookkeeping. They don't want to do their own record keeping. We live in Idaho, where the cost of living and the cost of paying a good bookkeeper is pretty low, and we're willing to do their books for them. We have NASA engineers in Maryland. We have what's another random example? We have a professional archer in Maine. People that don't want to take the time to do their own bookkeeping, they've got better things to do. We can take care of them thanks to the cloud and other applications that we can run. Okay, so the big burden of keeping track of everything yourself, you can outsource either to a wonderful little app or to someone in a low-cost location like us. Okay, self-employment tax. Again, this is the gut punch. You don't pay taxes all year long, and then you get a gut punch at the end of the year. So what do? The big thing is entity choice. Okay, if you're a sole proprietor and you're paying the full 15.3% self-employment tax on all your net income, I'm sorry, but that's the dumbest thing you can do right now. Okay, let's move on to the next slide, Ryan.
Yeah.
Um, and so you can save at least half of that self-employment tax by setting yourself up in a different entity. Okay. Usually, what we tell people to do is set up an LLC, because an LLC can choose how it's taxed. An LLC has the legal benefits of having limited liability, and the tax benefits of choosing if you want to be a sole proprietor, if it's just you, which doesn't make very much sense. Being in a partnership if you want to get a spouse or someone else involved, or being an S corporation. And an S corporation is really the best way to go anymore, especially after some of the extra surtaxes that came down with Obamacare and with the fiscal cliff negotiations a couple of years ago. They layered on a couple of taxes that make anything but an S corp not a great idea anymore. And so what we try to do with our clients, we try to talk with them a couple times a year to see how they're progressing through the year. When you're self-employed, your personal and your business lives change quickly. Okay? And we try to encourage you not to wait until you're actually doing the tax return to plan. There's only a few levers you can pull at that point. So we try to meet with people in, at least in October, give us some time before the end of the year, before you're into Christmas and spending lots of money and on the holidays and things like that, where you can actually do some tax planning. And it's super important when you're self-employed. And so I guess the overall point is there are huge benefits you can take advantage of when you're self-employed. Treat yourself like the employee that like the employee you are. You're the golden employee. You deserve all the Cadillac benefits. Okay? Health and retirement and the ability to deduct all your travel and your meals and entertainment. You have the granddaddy of all expense plans. Just view it that way. And then with the burden of keeping track of everything, you can use some nifty little apps, or you can outsource it to someone like us. And that's basically it.
So listen, guys. So real quick here, just kind of to close all this out and put everything into perspective. One thing that I've learned owning my own business and having a lot of success in my own personal business, and I've always had some sort of an S corp on the side, even when I was working a traditional job years ago, because I found there's tax benefits of having that there. I mean, lots of things you can write off, exactly what Scott's talking about, but one thing that you need to do, and there's lots of options out there. There's the TurboTaxes of the world, there's the H&R Blocks, but the reality is if you're not working with someone who knows what they're doing, you're going to miss out on some of the write-offs that you could utilize to decrease the amount of taxes that you're paying overall. Not only that, but preparation is key. Preparation is absolutely key to creating long-term success in your life. I mean, listen, taxes can be overwhelming in all forms and fashions of your life, especially if you're not expecting a big tax bill or a big tax payment that you need to make in the first quarter of January 2015 or February or whatnot. But recognize, guys, that if you're prepared, you're not going to fear. And I can't tell you enough how many times Scott and I and my wife have sat down, and like Scott said, a couple times a year, usually more than that, if we ever have any tax questions, we'll call Scott on the phone and say, okay, Scott, here's the scenario we're going into. Here's what our income is this year, usually halfway through. Should we continue to pay our quarterly taxes accordingly, or should we deduct some of that, or should we make larger payments based on our income? Those are things that I don't know. I mean, you can go out and learn this stuff by taking years of school. We didn't even talk about the credentials that Scott has in and of himself of having a master's degree from The Ohio State national championship football team.
Yep.
And that he was recruited to come there because their school is fantastic. There is a huge tax benefit of using someone like Scott for your taxes, like he said, because he lives in Idaho. I mean, not only did I save money on the taxes I paid the very first year that I used Scott, the amount of money that I paid to get my taxes done was significantly less than anything out there that would have done what they should have charged me. I looked at that bill the first time. I'm like, Well, man, these guys are actually honest. They don't overcharge for their services. They're very, very fair. And you know what? They're probably the best tax accounting firm that I've ever worked with or talked to, or and even the people that I've referred to Scott over the years. It's always been a measure of thank you. We appreciate that you've brought us here, that you referred us to Scott. And one last quick thing, guys, for those of you that are on the presentation with us tonight, I talked to Scott earlier, and he said, for those people that are watching this presentation that give me a call or that reach out and connect with me, and Scott, I'll have you give that phone number, but they said for those people that want to connect with me, I'll give them a 20% discount off their tax preparation. So call Scott, get in touch with him, see what your thoughts are. Have a great conversation with him. The problem right now is he's so busy because of all the clients that he has. You'll probably get a voicemail, but I guarantee you'll get a call back from him. So, hey, Scotty, what's that number to your office? Just curious.
Yeah, so the number, the physical landline here is 208-356-8500. Okay, and so that's a physical line. Again, but I think the easiest way probably to get that discount is probably just to email me directly. And so I'm gonna give you a couple of emails just to make sure it gets here. Okay. So one of them is just info@smithkunz.com. That's info@smithkunz.com. Okay. The other address, my personal email address, is Scott, SCOTT, @smithkunz.com. So that's SMITHKUNZ.com. You just mention if you're on this. I'm going to cut it off because this is going to be on YouTube, and I don't want people getting discounts forever and always. So email me in the next 3 days, and then we'll cut it off.
That's fair. Absolutely. So if you know of anybody, guys, if you know of anybody on your team or in your organization, your network marketing organization that you feel would benefit from this information and benefit from getting in touch with Scott, make sure you this will be posted live on my YouTube feed. I will post that back onto our Facebook page, the Facebook event that we've created. So one last quick thing, last shout out for Scott. You know, one of the things you have to realize, guys, in the home-based business world specifically is that if you're not working with a tax accountant that understands home-based businesses, they may not allow you to have the types of write-offs that Scott will allow you to do, simply because he understands the industry and he's done a lot of tax returns for people in this industry. Number one key, most important thing that you need to know when evaluating who's going to be doing your taxes. So, thanks everybody. Glad you joined us. We know this information was valuable. Scotty, thanks again for spending the time with us. It's been about 15 minutes. We'll broadcast this live, or we'll put this live onto our YouTube feed, and we'll move forward from there. Appreciate everybody's time tonight. Take care. Have a great night.
Thanks, Ryan.
See ya.